everyone. Welcome in to episode number 137 of the LSR Podcast. Adam Candy sitting in for Matt Brown, joined, as he likes to say, by the finest minds in all of the gaming industry, Dustin Gauker and Brad Allen, with us this week to talk about the latest and greatest in U.S. sports betting and daily fantasy sports. Of course, if you are a fan of this podcast, we hope you can help share and tell people more about what we do. Apple, Google, Spotify, Stitcher, wherever you find us, ratings and reviews are very, very helpful to that end. Tell a friend. They won't be disappointed, which honestly will be a new thing for us. We're all kind of used to disappointing around here.
My father-in-law listens to it and loves it, even though he's not a sports bettor.
You know what? My mom also listens and tells me that I do a good job and that I'm generally a good boy. So, yeah, obviously, Brad, do you have anything to add to this?
Nobody listens to this that I know.
No one in your family listens to this. And that, you know what?
Me.
You certainly are ahead of the game here, sir. We'll have a little bit of numbers talk, even though we're past the Super Bowl now and prime acquisitions season. We have the first 30 days of New York finally reported in full. We can wrap that up as we get ready for what's coming next. It is, however, earnings call season, and that will be where we start and probably spend a fair amount of our time, as we have some of the major sportsbook operators and gaming companies throughout the space reporting their fourth quarter earnings and giving us some insight into what's coming next in U.S. sports betting in 2022. And frankly, guys, it's a little bit different than what we saw in the second half of 2021. We've seen the rocket ships maybe start to lose a little bit of fuel, at least in the public perception. And Brad, let's start with Caesars, who had their call yesterday. The big news that came out of that was that Caesars has decided to essentially end most of its television advertising, which is shocking because Caesars was all of the television advertising, or so it seemed for a little while there, with their campaign involving JB Smoove and Patton Oswalt and the Mannings. But their CEO, Tom Reeg, said that they'd achieve the goals they were looking for with that advertising. What more did you take out of that call?
Well, I mean, it's quite a sudden turnaround. It was 2 quarters ago, 6 months ago, where Reeg was on these calls saying, we're going to spend $1 billion. We're going huge on this. And then 6 months later, he comes out and says, we've done it. Mission completed, mission accomplished. We don't need to spend any more. He said, we're going to dramatically curtail our media spend. Basically, they've got a few more ads lined up for March Madness, and then it's done. They're going to be off the airwaves, essentially. Now, so the question is why they're doing it. Obviously, Reeg says we've got 21% market share in pretty much all US states. And he said that's kind of where we wanted to be. And that $1 billion loss is where they want to stop, essentially. They don't want to lose much more than that. So now the focus turns to profitability. But there's a lot of questions about that. So one, is he telling the truth? There's some analysts out there, Joe Stauf at Susquehanna, he had a note out saying, maybe the Caesars product wasn't actually ready for prime time. So if you're spending $1 billion on advertising and you're directing them to this product that, as we saw in New York, like it fell over, basically, it wasn't up to the task. People were complaining about it. There was Reddit threads, there was Twitter threads, all saying Caesars doesn't work. So are Caesars actually going away for a year and working on the product until it's, as good as the best in the market, FanDuel, DraftKings, BetMGM, whatever? Maybe that's why you stop spending in the short term.
Dustin, a couple of quotes that I thought were interesting from the earnings call. Tom Reeg also said about the overall view of the market, we've gone from ever-increasing bullishness to unlimited bearishness at this point. What we told you was we saw a significant opportunity to acquire customers and grow this business. We think this is the most exciting growth opportunity this space has seen in 3 decades. And so I guess that quote in particular catches my attention because they're kind of going the other direction here at the moment. But to add to what Brad said, you quote, "You are going to see us dramatically curtail our traditional media spend effective immediately. We've accomplished what we set out to do. We set to become a significant player. It's happened quicker than we thought. And I think most of you know me as someone who's not one to spend any money needlessly." So can this work, Dustin? Do you think that Caesars can essentially say we've gained this share and we can hold this share or maybe even grow more without doing the same advertising that everyone else is doing?
Yeah, I don't think it works like that. I think we could all say that. It's, yes, you acquired a lot of customers. And like Brad said, this might be, a hat tip to the idea that they need to go back and work on product, have a better product so that they can retain customers more effectively. But yeah, I'm not buying that you can just stop and say, yep, we've got all these customers. We're keeping them all. We're going to grow from there. Nope. You're not like we'll talk about DraftKings and some of the other operators here, but it's not like they're going to go to zero tomorrow. So, there's still that competition, and there's brands that we don't even know about that may start spending again. Like it makes me think they should have spent the money slower. Like Brad said, they had this grandiose, we're going to spend $1 billion, and now we're done. That doesn't seem like the smartest. Yes, you got a critical mass in New York that worked fairly well because you got the customers, but we'll get into New York numbers and what those look like for Caesars. But yeah, I'm not buying that you can just go cold turkey and say, yep, we've accomplished everything, we're good to go. We'll just start making money now. And I don't think that's gonna really work in the current environment. Now it might be more important to you to not just spend money endlessly, but you're not going to continue to grow market share without spending right now.
And Brad, obviously Caesars has much bigger ambitions and much bigger fish to fry than just the sports betting business. They have an iGaming business. They have, of course, a huge land-based casino business, and their share price did bump up a bit as of Wednesday morning. That being said, you made the point that I think Dustin was hinting at there to say if Caesars pulls back on its advertising, it seems that DraftKings and FanDuel probably give a little prayer hands emoji and say thanks very much.
Yeah, well, so to your first point, that was one of the things that Tom Reeg was talking a lot about on the call. He was saying, I think they think they can get $200 million of extra revenue out of sports betting customers that they've acquired by then referring them back into the land-based business, and they'll go to the hotels, go to the restaurants. So they're saying, look, now that's the focus. Now we're going to put them in the rewards program. We're going to get money out of them that way. That was one of the angles. And then with regards to other operators, Jason Robbins has watched that call yesterday and he's done a little dance on his desk because they can't afford to keep spending $300 million a quarter like Caesars was like they're doing. And Caesars have gone, all right, well, stop. And it's quite interesting now. Does DraftKings keep the pedal down? And do they try and whittle Caesars down from 21 to 18 or whatever and whittle themselves back up? Or do they go, right, if we pull back as well, maybe FanDuel stops, maybe BetMGM stops, and we can all actually try and make money in, Q4 2023 instead of 2025 or whatever. So it's quite an interesting little game theory unfolding. Oh, and the last thing is the likes of Bet365 fanatics, they've been sat on the sideline going, we don't want to play this game yet. We're going to wait till it starts to make sense. Well, now it might start to make sense, and you might start seeing those guys start to make some moves.
That's a really important point, Brad. And I think to pull this back out from the larger view for a second, I think we should keep in mind when we talk about the pace that Caesars spent at, that these massive casino companies in Las Vegas and globally, obviously, they all have different pressures from their shareholders for different reasons. And if you're Caesars and you've just emerged from bankruptcy not really all that long ago, you probably want to grab and make a good impression as quickly as you can when you're competing against MGM, when you're competing against Wynn, whereas Wynn has been the one to step back and say, hey, you know what? No, this is not something we want to be involved in. We looked at BetMGM over the first year or two and said, they're going really slow here. Like, what is the plan here for BetMGM? So, different strokes for different folks. And Dustin, DraftKings obviously is not a land-based operator that way, but they have their own pressures in terms of profitability, and their call from last Friday was not well received by the market.
No, not at all. And yeah, this is I don't know. We were at Warp 9 or whatever it is in Star Trek parlance. I don't know what we're back down. Maybe not. We're getting back to impulse speed, or some lower warp. But DraftKings not great, as trading from the heavy days of like $70, I think in the early or late last year, now trading under $20. Like you said, the Q4 results not taken well. They did an EBITDA outlook of they're going to lose just under $1 billion for this year, and I don't think that's what people are expecting. This is when gaming stocks and everybody was the darling of this for getting sports betting up and running. This is I think people were expecting something to turn around quicker, and DraftKings, saying it's just against just pretty much spewing money to keep its market share, and that's not even to be number one in the market. So tough times for DraftKings for sure. They're obviously the spend complicated is going to be even worse in Q1 here when they were spending on to get ramped up in New York and try to get going on that launch. So lots going on with DraftKings, and again, good story by Brad breaking it all down. But yeah, the heady days of stonks only going up in the gaming space and sports betting seem to be long over.
Yeah, Dustin, I know it pains you to not be able to just blindly say buy D-King, but it might not really be the moment right now. Or, Brad, maybe it is. Are we buying the dip with DraftKings here? I mean, our friend Alan Bowden on Twitter has basically said when it was around 20 or 21, like, essentially, this is the buy point or it's going to zero. And you covered the earnings call for DraftKings, and obviously the guidance was revised. They tried to say, don't worry, everybody, this is going exactly the way we planned. I thought the little header that you put with it, system working, send more money, was kind of appropriate to the quote in the moment. What'd you take out of the call?
Honestly, they did remind me of not losing bettors, but that's one quote, isn't it? It's like an old punter's joke: "System works, send more money." And then the other one, Jason Robbins went on, I think CNBC, and said, the market's wrong. It's not us that's wrong. The market's wrong right now. And that's another refrain of a losing bettor. But what did I take out of the call? I've been chatting to analysts for a follow-up piece, trying to get an idea of if this money they've got about 2.2 billion on the balance sheet. They're going to be losing close to $1 billion a year at the current rate. So what happens in a year or two when money starts to run out? Like, if you're FanDuel or BetMGM, do you start trying to buy them at a sort of a depressed price, or like the core business is still strong, right? They still have this top 3 brand. They still have all these customers. And they say, as soon as we stop launching in new states, we're going to make money. So I do feel like it probably is a low, right? They are still very well set up. They have all the customers, and they have what pretty much anyone else would like. So I think probably what they need is just cash. And whether, again, talking to an analyst today, Paul Latham from Regulus Partners, he said, a merger with a European bookmaker with a lot of revenue, someone like Entain, who obviously they spoke to, who just has that revenue coming in so that the cash isn't an issue, so that running out of cash doesn't make them weak. Like that's probably what they need, Kindred perhaps as well. So yeah, I think, I'm not saying buy the dip, but they still have a strong core business, I think, once they stop throwing money away on state launches.
I asked for odds on DraftKings merging with Penn National Barstool. I need those odds.
Yeah, and if you we'll get to the background there for a second. Apparently, Dave Portnoy on one of his many shows said that it would be a natural pairing for Barstool and DraftKings to hook up. Of course, we made reference there to the DraftKings and Entain takeover discussion that fell through here in the last few months. But okay, all right, over at Brad365, what are we getting on DraftKings and Penn National getting together for a merger?
I can't see it. I can't see that Penn National is high up on the list of potential dance partners. I mean, they've got enough of their own problems, I think, at the minute. So I think one of these European companies are the favourites, like Kindred and Entain, both 2-1 favourites.
2 to 1 favor. All right. Minus 200. Look, and I appreciate Brad putting it in U.S. odds for us. That was really kind of him.
I didn't, Adam. You did it.
You said 2 to 1. That's good enough for me.
Yeah,
you didn't give us a 2.5 or something like that. That would have been painful for rubes like us over here in the West Coast of America. New York, of course, has plenty of information that we're following as well, guys. First 13 days of February have been as big as what we saw in January. The weekly numbers, including $473 million in handle, $15 million in revenue, and Brad, even with the pullback from Caesars, we continue to see the appetite for New York grow.
Yeah, I mean, all these companies on these earning reports have been talking how many customers they're acquiring. I think Caesar said 500,000, DraftKings said 300,000. So there's a lot of new customers coming through the door. I suppose what's interesting is how it's starting to take shape. Obviously, Caesars were the biggest company out the gate when they had that $3,300 offer compared to $1,000 from the other two. But this last week, FanDuel leading in handle. Even if they actually lost money on revenue, I guess. I don't know if they lost on a bet boost or something. DraftKings second, Caesars third, and then BetMGM kind of distant fourth. So kind of starting to, change to what we see in other states around the US rather than Caesars leading the way as it was initially.
And to add to that idea you talk about with FanDuel losing money, it was negative revenue on that handle. For FanDuel this time, I mean, obviously there's still going to be promotional money flowing through for some time here. But at the same time, Dustin, as the questions about profitability are weighing down analyst calls and stocks and so on, it does seem that the days of just being able to report massive handle without looking at the revenue column are starting to wane a bit.
Yeah, and some analysts, including our pal Alan, like to point out that is the metric that matters. As we're looking at market share and we're looking how things are developing, I think handle's a good metric. But yeah, at some point you got to make the money. FanDuel's not making has to pay taxes, turning a loss in New York, not great. Again, Super Bowl coming up. Maybe you're not real worried about it, but yeah, the handle has to come with some hold to it. You got to be, and you're hoping to, hold more than traditional Nevada, the 4 to 5, 6, 7%. You're hoping to get a little bit more than that with aggressive parlays and things like that. So yeah, we're at that point where you really need to look more at revenue than you do at handle, I think, from that standpoint, just because that's what, the growth is. You need to turn profitability. You can't just say, "Yep, we took a lot of bets." That's not going to impress the analysts and the shareholders anymore.
No. I mean, those are the things that will not, as Brad discussed earlier, have Jason Robbins doing a little dance on his desk, which is an image that has been stuck in my mind ever since Brad said it. Trying to get a little picture of what that looks like, but maybe I need to leave that alone. I'll tell you what might have him dancing though, guys. Dustin. A new state to get into. Arkansas is going mobile, just what we've all been waiting for. Arkansas going mobile, a state that was actually one of the first to approve retail toward the very beginning, has been a very small state in terms of handle and revenue during that time. And Dustin, it comes with a very New York-like tax rate.
I'm going to say I have a vivid memory of writing a story about that at the Portland airport for some reason. I don't know why. I've written a lot of stories, and I remember writing about this for some reason when that happened around that. Anyway, back to Arkansas, though. Yes, we have legal online sports betting coming kind of out of nowhere. Not totally out of nowhere. We knew this was coming with a move by regulators there. We now have the approval that's going to let it go live next month. Not quite sure what this market's going to look like. We know one is at least coming, the Saracen Casino there, and Bet Saracen, super exciting. I don't know how that's going to do. Obviously, just the casino brand. Those pure casino brands have not done very well in most states, other than Bet Rivers, which has created a brand on top of that. So we're looking at a 51% tax rate, or 51% of revenue has to stay with the Arkansas casinos, so you're paying a lot just for the market access. I'm not sure how exciting this is going to be for other partners. You're willing to eat that 51% to get into New York and all that, and that market access. Are you paying for it to get into Arkansas? Not quite as clear. And I guess I'd be shocked if none of the big guns get in here. But so you do have online sports betting. I'm not sure it's going to be the most exciting rollout, but I'll be happy to be cold taked if all the major sports books get in here, and Arkansans have a lot of places to bet on come March Madness here in a few weeks.
That story you wrote at the Portland airport might have led to maybe my favorite headline I've ever written, and I am going to pat myself on the back for a moment for this one. But that's when we went with Woo Vig Sui on Arkansas legalizing mobile sports betting. Brad, for those who don't know, Brad is based in the UK, in case you didn't detect the accent. Brad, will Arkansas sports betting be the hook that gets you over to the States?
Probably not. I mean, people were there's speculation that operators just shouldn't, go for a license. That the DraftKings, FanDuel should just go, no, have a third tier operator. I'm not going to name any because that will upset someone. But have one of these third tier operators, make no money, and then lower your tax rate and come crawling back. I don't know if that is how it will play out, but also the books may have shot themselves in the foot by going so heavy in New York and basically saying, yeah, we'll do it. But yeah, maybe Arkansas a different story.
Well, and let's go back to the story that you wrote about this. I think it was about a week or so ago. Essentially, we were saying, have operators screwed themselves in the long term by going along with the 51% in New York, essentially bidding it themselves, making the rate that high themselves, and succeeding in New York, touting the success in New York, so that everybody else in the country can say, oh, so you can handle 51%. Yeah,
well, so again, I was asked about this week because Hawaii was another one with a 51% number or even higher, maybe 55. But that Hawaii one went nowhere. Obviously, I think this Arkansas stuff was probably pre-existing New York. And I think the point was New York was a real special case. Obviously, Cuomo laid out that whole sort of weird game theory process, and operators were inclined to bid that tax rate up because it was New York, because they wanted to get in that special market. So I guess they might have a chance to redeem themselves in Arkansas by saying, no, we're not going to play this game this time around, and try and establish that precedent rather than the existing one.
And so New York, obviously, that rate we didn't have until December. Arkansas did come a little bit after that in terms of setting its rules. I don't know if it was inspired by New York in any way, but I do look at the Arkansas situation and say, we already saw the lobbyists for DraftKings and FanDuel try to argue that this law did not stand the legal test, and we might see a lawsuit come out of this before too long. We'll have more coverage of that at Legal Sports Report, putting that question to our legal eagle, John Holden, about the argument about the Dormant Commerce Clause, which I don't think any of the three of us are qualified to opine on here in the moment. Guys, Ontario is scheduled for an April launch. We have seen that be a very anticipated date for quite a while here. But, Brad, the tribal opposition to this seems to be growing in terms of the volume. We've seen the Kanawake, we've seen Mohawk, and some others basically say, we will join together and defend by any means necessary, that's a quote, defend by any means necessary their ability to continue to offer sports betting in the gray market without going through the regulatory structure in Canada. You had done some digging around on Canada and figuring out, what could impede the launch, right? What could slow us down in Ontario in particular? This was not what initially came out of your discussions.
No, I mean, it's not immediately clear what impact this will have. I mean, the Mohawk Kanawake, I believe is the pronunciation. Obviously, they've been quite big in the gaming industry. They licensed this sports interaction brand, which Entain recently bought, and it is obviously one of the bigger grey market operators in Ontario and in Canada. And they basically said, we don't need to be licensed. We're already licensed under our own regime, essentially, and we're not going to play your game and pay your taxes. So it'll be interesting to see how all that plays out. I can't tell you exactly what's going to happen there. I will say again from the Caesars call, there is the expectation that the existing operators in Canada in the grey market, again the likes of Sports Interaction, maybe Bet365, Betway, that they're going to have the biggest market share. They're going to be the guys on top of the pile that need to be toppled rather than the US operators just taking control.
Dustin, I think that brings up a really interesting situation when you compare it to the United States, because it's quite clear that the offshore operators who were operating in the U.S. illegally during the last 25 years prior to legal sports betting, let's just say that we, from our discussions, know that they will have a very difficult time getting regulated in many states in the U.S., whereas here we talk about Canada and the gray market operators and the fact that they might be able to join the market with minimal friction.
Yeah, absolutely. And I don't think we're talking the BetOnlines and Bovada's getting in to Canada to be clear, but we're talking about But we're talking about anybody who's been there's been sports betting going on in Ontario forever, and beyond the offshore operators that we talk about here, just everybody else who's just been serving Ontario. And Brad is absolutely right. Ontario is just going to be a weird launch. It's not like a quintessential U.S. launch because it's so ingrained already. This has already been going on, even though single game betting technically just legalized. Like, this has been going on, and you could see the sports betting is very pervasive already in Ontario. So what is interesting is that yes, there's going to be a bump around the launch, and other brands who have not served the market before are trying to get in. So this doesn't line up very well for Caesars, because I don't know how many people in Canada know what Caesars is. It's not a very good brand, unless you saw the Super Bowl commercial, not a brand that you're really going to know. Same for a lot of these others. Yes, DraftKings and FanDuel have been in the market with DFS. But MGM, they have no idea what that is. PointsBet's, trying to do a lot. That's why Penn National bought the Score. It's going to be really interesting to see what Ontario looks like. But I totally agree with Brad and other analysts. Like, this is the gray market's coming into the regulated market. Those are the winners right now. The traditional brands in the US that have done really well are going to be struggling, or going to have to pay a lot again for Ontario customers, because you can't it's not like they snap their fingers and they win in Ontario. It's a very different dynamic, I think.
I will offer a brief legal disclaimer for any confusion that I might have caused in that last 5 minutes. I do not believe Bovada or OddsShark or MyBookie are anything the same as Bet365 or anyone else offering gray market in Canada. Not the same. I didn't mean to conflate it there. Can see why I don't usually host this podcast. I'm usually just a talking head for Matt Brown's purposes to ask some questions too. Guys, thanks for spending a little bit of time with us here on the LSR podcast. You can find Brad on Twitter at Brad Allen NFL. Find Dustin at Dustin Gauker. I'm at Adam Candy. That is 2 E's, no Y. Matt Brown will be back with us next week as we roll along here on the LSR podcast. For Dustin, for Brad, I'm Adam. See you next week.